Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome. This is the Wealth Without Wall Street podcast. Your host, Joey, the Italian Stallion Murray, joined as always by Russ, the idea guy Morgan. Russ, I am so fired up about becoming our own bank after this episode. Can you believe that?
Yeah, I can see why. This is a really cool episode. It was a subject matter that we know a little bit about when it comes to lending, right? We've been using these whole life policies and lending to all sort of different business entities and investments. And this was just kind of a different twist on it.
Well, I mean, some people that are like, you're listening to our podcast every week and you're like, okay, these guys are infinite banking guys, but they keep talking about all these other passive income ideas. This week is no different. You're like, wait a minute, note investing. I thought, this is infinite banking. Why would we be talking about note investing, Russ?
Well, we say that you should be your own banker. And this is a literal take of being the bank. When you go out and buy a note, which for some of you are like, what does that even mean? A note, like a note where, Joey used to write to girls like check yes or no, and they would come back with the big X in the no column. No, we're not talking about that kind of note.
I was handing those notes out, bro. Come on, get it right.
Yeah, we're talking about the note where someone has a mortgage, for instance, against their home. That is a note. Typically, that's owned by a bank. Sometimes it's owned by someone who owned the house and sold it to them, a seller finance note. Either way, though, people can go out and buy these notes that exist. And we're going to go through a lot of that detail in this podcast, which I feel is really interesting because there's just lots of different ways to put our money to work. And as our guest today, Jamie Bateman, who is a client and someone who has been active in our community, shares, it is a way too, Joey. I think some of you, as you're listening to this, might find interesting. He talked about there are ways to make this more passive, which is exciting for some of us who have less time than others.
Yeah, I think really what it boils down to is we always want to try to hit a strategy from almost like a tiered effect. Like, okay, what if I have more money than I have time, or if I have more time than I have money? And there's like this kind of stair step. Well, I might need to start at this DIY level to learn all that I can, spend the time and energy being educated and doing the hard work, and then move up into maybe more and more passive ways. Or you're at the opposite end of the spectrum. You're like, man, I love this idea of note investing, but I really don't have any time. So who can I partner with? There's JV opportunities, stuff like that Jamie's going to get into today. But I love the idea that infinite banking is not the end. And we talk about that, but Jamie really kind of put in perspective today, this is really like peanut butter and jelly. Infinite banking is the means to having a successful note investing portfolio or rental portfolio or land flipping portfolio, right? As we've talked about over and over on the show. And so if you're hearing this for the first time, you're like, wait a minute, IBC, infinite banking, like, okay, I've heard this enough. Enough's enough. I need to learn more. Where can they go, Russ?
Yeah, I think this is a great time for us to kind of highlight the course that you and I built that breaks out what infinite banking is and how you can set this up for yourself. And we did it in a very systematic way, very bite-sized videos. You can go to wealthwithoutwallstreet.com/IBC 101. So IBC for infinite banking concept, and 101 meaning like even Joey can figure it out.
Oh, thanks so much for that, Russ. But yeah, we want you to be educated, get in the community, learn from other people that are doing this, and find your path ultimately. So I'm very grateful that Jamie has taken his own journey. You're going to hear great stories about how he got really frustrated at his 9 to 5 and how that really set him on his own course to figuring out what's his path going to be. Ended up being in note investing. There's a lot of cool takeaways from that. Let's go ahead and dive into this interview with Jamie Bateman.
Okay, I've listened to at least 5 podcasts. I'm now an expert in the infinite banking process. Maybe not, but yet I would love to talk to somebody about it. How can they do it, Joey?
It's as simple as going to freecall.wealthwithoutwallstreet.com. You can sign up for a short 15-minute call to see if this is a fit for you, and you can work with one of our coaches to financial freedom. Welcome into the show, Jamie Bateman joining us live, man. So glad to have you on the show.
Thanks, Joey. I really appreciate you and Russ having me.
Jamie, we searched high and wide to try to find somebody who actually met with Joey and despite his bad training became a client. And we found you. It took a while to get you on the show, but we're glad to have you here.
Yeah, I guess that speaks to the power of IBC, right? I mean, if even Joey can sell a policy.
Oh my goodness. You don't know how truthful that is, right?
I'll just be over here getting beat up.
Oh, sorry, Joey's here? Oh, sorry, Joey.
Run me over with the bus. Okay.
Well, for those of you that are not a member of our community, Jamie is someone that adds continuous value, and he has a really unique expertise and a subject matter that, shockingly, Joey and I don't know tons about, and that is note investing. So we want to dive into note investing a little bit today and get to know a little bit about Jamie Bateman. So Jamie, give us a little background into kind of your entrepreneurial journey.
Sure. My wife and I purchased a rental property about 10 years ago, 11 years ago. But frankly, we weren't really treating it so much as a business. So for several years, we had a condo that we rented out, and it was fine. We still have the same tenant there. He actually comes to our house and drops off 6 months of checks, and twice a year we see him, and it's pretty easy. But frankly, I was getting a little bit tired of my day job back in 2014, and tired of the commute. And was, because of the commute, listening to a lot of podcasts, doing a lot of reading, reading on forums and things like Bigger Pockets. And at some point I kind of made the mental switch that, let's treat this real estate thing like a business. And so I started kind of assessing what I would consider strengths. So not just personal strengths, but just in our circumstances as well. So like, my father.
Hold on. Why real estate? Why was
real
that
estate?
the way that you stepped into?
You know what? I'm not super creative, and it's a tried and true thing that so many people have done, and so I'm pretty good at kind of learning from others. Why reinvent the wheel? There is some stat out there about 90% of wealth was created through real estate. I don't know if that's one of those fake Abe Lincoln quotes or what, but it's certainly, essentially you got the stock market. I know you guys are big fans of the stock market, but
don't cuss on this show, Jamie. This is family friendly. Come on.
But yeah, I mean, it's a tried and true way of investing and creating wealth, especially long term. And to piggyback on that, I kind of was assessing. My father's a real estate agent. My brother is a loan officer. My wife and I had each worked at separate title companies years ago, out of college. And you start focusing on what you do know and the people in your life that could help you reach your goals.
Well, you said you're not creative, Jamie. The fact is that you actually said something about the rental property that you have that was really interesting, Joey. I don't know about you. In my history of owning rental property, I still have yet to a tenant to show up to my house and drop off 6 months of checks.
Yeah, that is unique.
Okay, so where did that idea come from?
So that was our tenant's idea. He's still there. He's been there for 10 plus years. He's just he's a little bit older, and he's a divorced professional that just doesn't want to own a home. But I would say he's a little bit old school, and that was his idea. And we don't live far from that condo, so that was his idea. So I was fine with it. I offered to set him up because now we have, all of our tenants pay online, but he didn't want to mess with that, and I don't want to mess with it either.
No, yeah, if he brings you 6 months of checks, it's just your job to like take a picture of it and put it in your bank account on the first, right?
Right. That's exactly right. Certainly things break. I don't want to pretend like we've never had an issue or anything,
Yeah.
but he is the ideal tenant.
That
Yeah.
is amazing. I love that part. So that is, whether it was not your idea. By the way, going forward, I would take credit for that, 'cause that is an amazing.
I mean,
tool.
I'll we know what we're doing a lot better now than we did then. This was, a Craigslist ad, and the guy contacted me, and I said, "Yeah, sure, sounds good." So
What a blessing to have
Yeah,
have a tenant
absolutely.
that's been in there for 10 years. So you started acquiring rental properties. How many properties have you guys acquired over the years?
So we have 9 now, mostly in Maryland, and then we just acquired one in Jacksonville, Florida, through our note investing, which is a separate part of real estate.
All right. So you
That's
said
where we
note
are.
investing. That's an interesting subject matter. Most of us, including me, really don't quite understand note investing. Now, we know that notes are something when you have a mortgage or you have a student loan, that's a note. And most of the
Yep.
people like Joey have been on the other end of that spectrum where they were borrowing money for something. He's trying to figure out a way to get those unicorns up and running.
Right.
But then on the opposite side are banks, typically people who are the ones lending the money. So I'm assuming you're on the lender side. Explain that
Exactly.
whole concept.
Yeah. So, I mean, and some people argue that technically you're not the lender, but to me, it's the same thing. So whether you're originating a note or not, whether you're buying an already originated note, you're a lender. So you really are becoming the bank. There's a whole secondary market of notes that was kind of created in the 2008 meltdown. Now, seller financing notes have been around forever, so that's a kind of a separate category, but the market really kind of exploded with non-performing notes specifically in 2008, 2009, 2010.
And non-performing means they're not paying.
They're not paying. So
Okay.
to answer your question more directly, a note is a promise to pay. That's all it is. So we deal in first position mortgage notes, just like most people have on their home.
Yeah. And by the way, I had a lot of rental deals there. They were non-performing as well. All right. So
Right.
you guys go out and find notes that someone is selling, and I'm assuming they're selling at a discount. Explain how all that works.
So
give us numbers example.
Yeah, so a non-performing note, and people like to make things very black and white. It's either performing or non-performing, but the reality is, if someone's behind on their mortgage, it might be what people refer to as sub-performing. So it's not just two categories.
Okay.
But so one reason for the discount it would be that the note is non-performing. The borrower is not paying their mortgage, and so you're going to get that note at probably maybe 40 to 55 cents on the dollar. So they may owe $100,000, and you can buy that for $45,000. These are very rough numbers, and tons of variables go into this, but gives you an idea on a non-performing note what you might be able to buy it for.
So is this these notes typically are they on any kind of asset or just homes, or what do you?
No, I strictly stick with first lien mortgages, owner occupied. I do have one rental property note, but when we go to buy a note, that's what we focus on. So.
All right. So
Okay, but you walk into the bank, you say, "Hey, by the way, I'm looking to buy notes. Which line is that?"
Right.
And they're like, "Over here, sir." No.
next to the suckers.
Exactly. So, and that's the kind of one of the really $1 million questions. Where do you find these notes? And there are some online exchanges, paperstack.com. I've purchased several notes from, but essentially that's, as much as I love PaperStack, that's just like a kind of eBay, or it's a broker, whether it's online or not. You still got to do your own due diligence. So that's one place, but you're not calling up Bank of America and asking for to be able to cherry pick a note from them. the big four banks, someone at my level is not going to have success there. So what happens is a lot of hedge funds will buy big pools, very big pools of notes from the big banks. And this is institutional notes. This is not seller finance notes. And then those kind of trickle down, and it may take a little bit of time. So one of the sources is online exchanges. Another source is note brokers, people that this is what they do for a living. They'll put out a tape, what's called a tape, which is an Excel spreadsheet typically, and it may have 5 notes, or it may have 500 notes or even more. And it's your job then to kind of go through and see what you might be interested in. Another real quick, another very profitable and lucrative source is other note investors. So I think initially I kind of overlooked that a little bit, but different note investors have different needs, and you can really find some good deals just by networking that way.
All right, so let's talk about the why behind this. So as we're driving down the road, we're running on the treadmill. It's like, okay, what is this note thing about? And
right.
so let's get to the juice and the grape a little bit, and then we'll get into the weeds, right? Because I love the details, but the concept, I want to understand the benefit.
Sure.
Yeah.
Where's the sizzle on the steak here? So
Yeah.
let's talk a little bit about the benefit of note investing. Why did you think note investing? You said you knew real estate. Everybody understands rental properties.
Right.
But note investing, what was the attracting feature of that to you?
So I think initially it was probably the quote unquote passive income side of things, which it can be somewhat passive depending on what you're buying and how you're treating it. I do have a blog post that kind of compares rental properties versus note investing. And just like most things, everything has pros and cons. So there's note investing isn't the only way to make money, but I think what a couple things that appealed to me were the somewhat passive part of it, meaning you can do it from anywhere. So if you have a laptop and a phone, you can be a note investor. You don't need to be physically going to these properties that are the collateral in these notes. I've never actually been to any of the properties that back up our notes. So that was a big part of it. Is it's the ability to scale is something that really stood out to me. When we started our rental property business, I wanted to be close to the properties, and just so that I could kind of manage things better. But frankly, in our area in Baltimore County, you're not going to find really, it's very hard to find very good deals. So it's not like, parts of the Midwest and other parts of the country where the numbers just work better. So with note investing, you can get in at a fairly low and scale pretty easily. So we have notes in 9 different states at this point. Maryland is one of them, but I've never even been to that property. So the ability to scale and do this from anywhere was a huge draw.
So it's passive. You can do it pretty much from anywhere, so it doesn't have to be local. Let's talk about returns, though, right? So everybody pretty much understands the returns of rental properties. Average property, I put about $100,000 property. I put 20 grand in. After net, I end up with $300 a month. So let's talk a little bit about note investing.
And I do want to circle back on the passive part of it, because it's not always totally passive, but
we got this performing and non-performing. I'm assuming there's some issues there, but we'll come back to that.
So returns, so if you're targeting performing notes, a lot of note investors will target maybe currently, I'd say a 12 to 15% yield is what you're really looking for. And a lot of that's come down a little bit even in the couple years that I've really been focused on notes, but that's a return that you might get from a performing note. Just like anything, if you're trying to take the passive route and go more performing notes, you're not going to be able to add too much value there. So your return's going to be a little bit lower. With a non-performing note, there's typically more risk. With that said, you're buying at a much greater discount, so that mitigates a lot of that risk. But non-performing note, you may very well come across a deal that you can add value to, and there are lots of ways to do that, and then end up with a 30% return. So these are rough numbers, and um, they're treated. They're very different, as far as non-performing and performing. Typically, with a non-performing note, you're trying to, solve a problem. So you're either working with the borrower to get them reperforming. That's the ideal way to go, is to take a non-performing note and create a performing note, and then resell it. And it's still sold at a discount compared to the principal balance, but you're making a profit there. That's more of a clearly defined start and finish point. With a performing note, you're probably just kind of holding that for passive, more passive income. But that gives you a general range of the yields and returns you might expect.
Stallion, I love it when we get to hear what people would be doing if they got to financial freedom. The last one that I got to read, somebody said, I would be driving and picking up my kid every day from school. That motivates me.
That is why you need to be a part of the community that is seeking financial freedom. Go to community.wealthwithoutwallstreet.com. You can join for free today. Okay, so let's break this down in terms of maybe do you mind walking us through a scenario that you've done even recently, like
Sure.
how you approached it, what attracted you to it, and maybe you may not even have completed the process that you intended to, but give us an idea of what that practically looked like.
So, and I don't mean to sell my blog, but I have another blog article about this deal, and I shared it in the your community, Wealth Without Wall Street community. But so we purchased a note a little over a year ago. It was non-performing. It was in Florida, and we purchased it for approximately $46,000, right? Well, the principal balance owed was $93,000, and total the borrowers owed about $123,000, something like that. So they had not paid in several years.
Okay, so those are the back payments. The difference there you mentioned was
it's
okay.
Interest, arrears, taxes,
Fees,
late
whatever.
fees,
Yeah.
all that stuff. Yep, and you're not always going to collect that. So that's why most note investors will really focus on the principal balance.
Okay. First of all, let me ask, what was it about this particular note? If I'm envisioning, I've got this Excel spreadsheet with 500 notes on it.
Yeah.
How did that one potentially pique your interest?
This one was through PaperStack, but I think the price was right, and I also was keen on the Jacksonville market, which is where this property is located.
And why Jacksonville? What was important about Jacksonville?
It just it's more of a kind of blue collar compared to a lot of the like the Gulf Coast of Florida. It's more of a stable economy. A lot of military jobs are there as well.
So is that because if this specific person didn't pay you, you had to take the property over, you felt like you could put somebody in it? Is that what you're talking about?
Yeah, I mean, I don't want to pretend like I had the full exit strategy planned out a year ago, but another thing, Russ, that I should have highlighted earlier on notes is it really gives you so many options. It gives you so many exit strategies. And it was one of the things that really appealed to me about note investing. So there's so many ways to exit a non-performing note. You could just resell it and hope to get your money back. You could work with the borrower and modify the loan. You can end up doing a foreclosure if you have to. That's not our goal off the bat by any means, but ultimately the first position mortgage note investor typically focuses a lot on the property because that's normally where you're going to exit. Second lien notes is a whole different game that I don't even get into. They'll focus on the borrower a lot more. But in this case, what we ended up doing was working with our attorney in Florida. She's really good. We were moving forward with the foreclosure because I couldn't get any headway with the borrower, right? So, we have third-party servicers who manage collection of payment and that kind of thing. I don't typically reach out to borrowers personally. Some note investors do. You can do that. It's just depends on your business model. But in this case, the borrower was not very receptive. She was kind of just, putting us off and saying, "Oh, I'm going to be in Maine for 2 weeks on vacation. I'll talk to you after that." And you're not
And
paying your mortgage, but you're going on vacation. There's
yeah,
a problem.
she's 2 years behind.
Yeah. Yes.
I mean, at this
Exactly.
point, this is
She's got plenty of money to go on vacation. What are you talking about?
Well,
Like a sweet deal.
and funny you say that. Turns out that out of the blue, we got a call from her brother-in-law who said, "Wait a minute, I've been living in this property and paying her rent the whole time." Now, another thing I didn't mention was her loan had already been, she was on a 3-year trial payment plan. So the seller, the note seller who I purchased this note from, had given her a much reduced payment. So we're talking, instead of $1,200, it was $400, and that includes escrows. So still failing to make that payment, and I don't want to sound, harsh, because I think her husband had passed away, and, things happen in people's lives. So
Sure, other factors.
that's
Yeah.
one of the things about the kind of more lower level individual note investor. We have the ability to work with borrowers one-on-one.
Yeah.
Or at least through the servicer, and the big bank is not going to understand this woman's problems, so.
Yeah.
But this is definitely a scene from The Big Short where they're knocking on the door and they're like talking about them not paying, and the guy's like, "What are you talking about? I've been paying rent at this place. Am I going to
Exactly.
lose my home? I pay rent here."
Exactly. So she's, I don't know how long that was going on or what, but he'd been paying rent to her for however long, and she's not even paying the mortgage. So we were moving forward with the foreclosure. There's really not too many other options at that point. And so we struck a deal with her, and we did what people will call cash for keys. We actually didn't end up paying her anything, but she signed the property over to us. And this property was at that point estimated to be valued at maybe 130,000, something like that. So
And you guys
And you
paid roughly
only
how
owe
much?
46.
46 plus, some legal fees and that kind of thing.
Yeah. Okay. So you bought the property for 46, had some legal fees, got her out. How long did it take from when you started working with her to actually get the keys in hand and property vacated?
We bought the note in April of 2019, and then we actually just got the property. We had a lot of rehab to do. It was probably unsurprisingly to many people, it was in rough shape.
Yeah.
Just kind of really filthy conditions, which I feel like is one of the wins in this deal, was that we were able to get these people out of this bad situation. I mean, they were bed bugs and just really not healthy. So we ended up putting about $25,000 of work into it. So we're not currently only into this deal for 46, but
Yeah.
still finished up, got the property management company in Florida, listed it for rent, and 2 days later it was rented. And this was in the middle of a national pandemic. So I was a little bit surprised that happened so quickly, and very thankful, obviously, and the new tenant is in there now, and so far so good. So that's I'm glossing over a ton of details. And frankly, when I first got the deed in lieu, so it's a deed in lieu of foreclosure. So we're saying, if you sign the property over to us, this is just a contract between the borrower and us, that if you sign this house over to us, we will not foreclose on you. So she walks away with no foreclosure, which is good. And she ended up, the property value was certainly lower than we expected. So she was forgiven tens of thousands of dollars in debt.
Yeah.
So it's certainly a win for her.
You have a property now that you basically are in for let's just call it 75,000 with legal fees, and
Exactly.
you're renting it
Yep.
for how much?
1075.
1075. Okay.
Yeah.
Nice.
So you might find that where I live, those kinds of, it's almost, so people talk about the 2% rule, the 1% rule with rental property investing, where the 1% rule is where you're trying to, if you bought a house for $100,000, all in for $100,000, you rent it for $1,000 just to kind of,
yeah.
Well, we're I think it came in at about 1.43, which is pretty good. I mean, you can do better. And there were some ways we actually could have done better, but that's always the case. So,
but this is a good, I mean, you're telling about different strategies, right? So one strategy is I buy a note, I start getting paid monthly payments, assuming the person's paying.
Yeah.
Otherwise, maybe I buy a note and the person's not paying. I try to negotiate with them and get them to pay. And I'm assuming
Right.
in those deals, you could probably sell it. In this
Right.
example, you bought it, you had to ultimately get the person out, and then you turned
Right.
it into a rental property. Or it could have
Exactly.
been a fix and flip, right? I mean, I'm sure you probably could have turned around and sold this property
Yeah.
to someone else, and you, for whatever the value is, and you had 71K in it.
That's exactly right. So initially, when I took the property back, I actually was going to sell it. I wasn't sure how much work I was going to do to it. Probably not too much, frankly. We've done several rehabs locally, but I've never done a long distance rehab, or I had not. So initially I was going to sell the property, fix it up a little bit, do some landscaping, paint probably, and sell it. But the more I researched about the Jacksonville market, I even though I'd liked it initially, I liked it even more when I researched further. So who knows with the pandemic and everything, but I ultimately I thought, okay, if it's just a terrible rental, we can sell it next year,
Yeah.
Right.
So why rush? Once you sell it, you can't go back. So that's where we are. And I may end up trying to do a cash out refinance or something. We'll see.
And
Right.
let me ask this: what was the end value once you did the rehab? Did you get an appraisal?
I didn't get an appraisal, but I've done some online, appraisals, AVMs, and it's in that 130 to 140
Okay.
range.
Okay. I didn't know if that was before the rehabs or that was
So
after that. So
one of the risks, and you're touching on one of the downsides with note investing is you can't typically get into the property before you buy the note. I mean,
Right.
your mortgage company has probably not ever called you up and said, I want to come do a full inspection on the inside of your house, right?
yeah.
So that doesn't.
That's not. You guys don't have that.
So we did do a pretty cursory interior inspection once we got the deed in lieu signed when the tenant was still in the property, but it just wasn't thorough enough to understand the how much it was,
How much work?
how many issues there were. Yeah.
And when you bought this note, what was your original intention? Was it just to get it performing? That was your primary strategy?
Yes. I mean, that would be the primary strategy. I would,
Okay.
ideally you get it performing for 10 to 12 months and sell it. So performing notes are kind of normally trade around, I'd say anywhere, they've come down a little bit, but 80 to 95% of the principal balance. So if we'd gotten this performing, plus there is that, $30,000 in arrears that they owed. So if we'd gotten the note performing, I think we could have sold it for, maybe 90,000 or something. So that's
I gotcha.
ideal, is to get, work with the borrower, get them reperforming, and resell the note for someone who's looking for a little bit more of a passive note investment.
So for those keeping score at home, if you buy a note for $100,000, or you buy a property is worth 100,000, and this example is worth 130 at all in after it was fixed. You
Right.
bought it for 46, and you had some legal costs because we had to get them out. But if you would have been able to get the property for 46, spent 10 months getting it reperforming, they started paying, they were on schedule, then you could have
Right.
turned around, not only put that money in your pocket, but then taken something you paid 46 for and potentially sold it for 80, 90, $100,000.
Exactly. It's one of you're adding value. So
Yeah.
you need to solve problems in real estate or note investing. So you're taking a non-performing asset, which for people unfamiliar with notes, they're like, why in the world would I buy something that the borrower is not paying on?
Right.
Well, because you might be able to add value, and you might be able to make it performing. And so that's,
Yeah.
yes, yep, exactly.
If you can solve problems and add value, money follows value. We see that a lot of times.
Yeah.
That's why Joey's been following me around for so long.
I'm still looking for it.
And I'm
It's
paying,
crazy.
I'm paying him to do it, right? All right, so let's talk a little bit about infinite banking and how
Sure.
are you using infinite banking? By the way, if this is the first episode you've ever listened to and you just were super excited about note investing, and I use this concept, infinite banking. Infinite banking is the practice of using dividend-paying life insurance policies as a storage place for our cash before we then invest it, before we then deploy it into the entrepreneurial journey that we're in. So how did you start using infinite banking in this process?
So, in spite of Joey, um, just had to get that in there again.
Yeah.
So, I'd heard of infinite banking years ago, 4 or 5 years ago or something, but I just really didn't research it enough, and kind of dismissed it. There's a lot of anti whole life insurance rhetoric out there. Obviously, whole life insurance is more expensive than a term, for example. But I heard you guys on a podcast actually and kind of looked into infinite banking more, looked into your website and reached out to you all. And then I met virtually with Joey several times and picked his brain. And one of the questions is, why aren't more people doing this? Because you figure there are a lot of smart people out there, right? So if most people are not doing this, there's got to be a catch, right?
Mhm.
So he was able to kind of get me over the hump there mentally. It did take a couple months for me to actually. I bought Nelson Nash's book and I read that. I forget the
Becoming
title.
your own baker.
Thank you. Um, and that certainly helped drive home, how the process works, and just kind of got over some of those fears about it and decided to move forward and purchase a couple policies.
Well,
All right,
what
so
was it about that though that has to do with note investing? Like, is there any
Yeah.
connection in your mind?
Absolutely. So, you're putting, it's a way to fund your note investing business. It doesn't have to be note investing. You guys have a lot of other guests on who have really good niches and profitable businesses. But I don't care who you are in your business, you're going to run out of your own money, right? So if you're trying to grow, it doesn't matter whether you have $1 billion or not, and probably not smart to put $1 billion of your own money into your business anyway. But for me, this became a way to fund our note business and at the same time keep those same dollars working in the policy itself. So that kind of blew my mind a little bit. Where you're still earning interest over here in the policy, but then you can take out a loan from the policy and help fund the note business. And we have done that. So when you run out of your own money, or at least the amount of money that you've allocated to your business, you got to find other money to buy notes. So it's either you're going to other people, which we do that as well. We do joint ventures and sell partials. So there are a couple different slightly more advanced strategies to use other people's money for note investing. But if I borrow from the policy, I don't need to send my policy a quarterly report or give them an update on what's going on with the note. And frankly, so I have everything set up automatically through bill pay to repay the policy, so there are no issues there. But there's so much flexibility. If our note business takes a dive, or just we need to pause for a few months or something on repaying the loan, I can do that. So there's so much flexibility built into it that really appealed to me as well.
So Joey, I wrote down some notes here. Whole life is more expensive than term. Performing notes are more expensive than non-performing notes. And private money is much more expensive than borrowing against your whole life policy. You see the value in all of those things, right? You start finding that thread. What are we accomplishing as value? Money cost, and it has a cost. We have to assign it. We have to find out how to get more of it in our control, so that way then we can get the most from it. Jamie, I know that we've only really scratched the surface of note investing, and I'm thankful that you've agreed to come into the community and do a live Q&A, so that way
Absolutely.
Joey can ask a couple of questions and you can answer his questions, so it doesn't seem like it was just you and I on this podcast.
Joey, I need you to read all my blog posts first. Okay, I don't want to spend time
Answering just the basic things.
the basic
Let's
stuff.
get deeper. Okay.
I'm all over that. Labrador lending, right?
You got it.
Yeah. All right.
Awesome.
Well, Jamie, thank you for coming on the show. This is definitely one of those really niched areas, and that's what I love about it, right? I mean, when we are looking for a journey for us to take control of our own finances and picking our path, maybe as you're listening to this, maybe you're saying, well, I kind of have a background and expertise in and around this area. And I feel like maybe I like the passivity of it. And I like the fact that maybe I can add value or I can do it remotely. And there are ways that you can either buy rental property. This could be an avenue to rental property if the person doesn't end up paying, but it also could be many different outlets. If you're interested in this, I'm going to encourage you to come into the community. If you're not already, go to community.wealthwithoutwallstreet.com. You can sign up. We're going to be doing a live Q&A with Jamie in there. If you're not listening to this, you're listening to this months after it's aired, you can go to past events. You're going to be able to find that Q&A. And we're going to ask you a lot of intelligent questions next week, Jamie, on how all that works. So that way, for those, and
I'll be
we'll
asking
draw some of
those.
this stuff out so that way we can keep tabs, because I know it's hard whenever we're riding down the road to figure out how all this is going and keeping up with all the numbers. So thank you again for coming on the show. It's been a pleasure to have you.
Really appreciate you guys having me. Thanks a lot. It was a fun time.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will